Welcome to the Four Rooms podcast, where we explore the four rooms of entrepreneurship: health, wealth, scale, and relationships. Each episode is dedicated to opening new doors and uncovering insights that empower you to design your entrepreneurial journey to be both lucrative and fulfilling. And now, your hosts, Amber Spears and Brett Kaufman.
Okay, welcome to the Four Rooms Mastermind podcast. I'm here with my dear friend Dylan Gaines from International Payment Solutions. Dylan is a multi-8-figure entrepreneur. Him and his brother and his mom run the company, which is awesome. She started it. It's a family-owned affair. They have combined over 25 plus years now of merchant processing experience. Dylan's also the person who processes with Four Rooms and someone that many people inside of Four Rooms process with. And I can tell you that him and his team are always available for any calls, anytime, anything gets stuck. We absolutely love working with Dylan, and I wanted to bring him on to really talk about the state of payment processing right now, particularly for online business owners or health and wellness companies, Nutra, info product, high ticket sort of merchant accounts, and just kind of talk about the landscape, because Dylan's somebody that I really trust, and there's a lot of stuff going on in the financial services market right now. So I'd love to get your perspective on all of that, Dylan, and welcome to the podcast.
Yay. Thank you so much, Amber. It's great to be here. And yeah, there's definitely a lot of things changing with the landscape and artificial intelligence, and love to kind of delve into that a little bit and then give a little background and, my experience and stuff. Starting with the background, I got into payments 24 years ago now, my brother and I, and my mom started UMS banking out of her garage 39 years ago and built it into a multi-million dollar empire. And my brother and I swore we'd never work for our mom. And, I was going to be a Major League Baseball player. My brother's going to be a motorcycle racer. And, we followed those dreams. And my mom's company started growing and growing. And she called us one day and said, I know you don't want to work for me, but I really need people right now. We're expanding like crazy. Just give me 2 weeks and then you can quit and everything. That was 24 years ago. So I learned a lot from her. She is a major inspiration for me and how I run my business and how I create the culture, because she was very much a mother. She was a very motherly person to everybody in her staff. She had over 100 employees. Every Friday morning, she would come in and cook breakfast for a staff meeting, and she cared about people, and she really treated everyone like family. And kind of our slogan is like, welcome to the IPS family, because that's the way I try to treat everybody. And I don't want to have hundreds of thousands of customers that I don't know their names. Like I enjoy the one-on-one, so there you go.
Yeah. What a great story, man. I love that story about your mom cooking breakfast on Fridays.
Oh yeah.
We love Mama Gaines.
She's amazing.
She's great. If anyone gets a chance to meet her, she's awesome.
Yeah.
So tell me a little bit about AI and processing, because that's a very hot button topic right now.
It is.
With that.
What I'm noticing is in two areas. One is the larger processors like Stripe, for example, they're using artificial intelligence in their risk department. And in fact, they are letting go human beings and real people and allowing a robot to decide whether to close somebody's merchant account down or hold their money, which is kind of scary, because now it's just this algorithm that is coming into place that just immediately closes somebody's funds and they're not even notified about it. So in that regard, it's a little bit scary and even more important to find a processor, whether it's IPS or other companies that do a good job, to be able to have that personal relationship, because I think the further away that you are from actual interpersonal relationships, when you're talking about your lifeline and your blood, if you couldn't accept a credit card payment and you're an online business, you're out of business. So really ensuring that you have that personal care. The other place I'm noticing artificial intelligence is in the card issuing side. So like you and me and everybody listening, we all have credit cards in our wallet. And what happens is there's this new algorithm that tries to detect suspicious activities and will automatically decline your credit card if they think it's suspicious. That could be anything from online supplements, a transaction that's higher than your average. So when you're talking about like high ticket sales, right? If you and I go into the grocery store and the gas station and $500, $100 here, and then all of a sudden we pay for like a $10,000 coaching, a lot of times now with AI, they're going to flag that transaction and decline it. So you have to start understanding that and being able to work around that and be able to maneuver and manage your company so that you're not getting as many declines. Yeah.
So is that like an algorithm that all of the credit card processing companies are using, like MasterCard and Visa? That's something that they're upping the ante for?
They're tightening down. Look, every year, you see the numbers of online fraud, right? It just keeps going up and up and up. There's a lot of fraudsters out there, and they're trying to tighten that down. But by doing that, they're also inhibiting sales and transactions that the merchant actually should be getting and are not getting. So yeah, it's just creating a tighter, when you finally get somebody to the bottom of your funnel and they're ready to pay with a credit card, and then the issuing bank thinks it's something fishy and declines it. So it's just creating more, making it tighter to continue to run a business online and especially in the high ticket space.
Like, what is the percentage increase that you're seeing of declines? Like, if you had to put a number to it,
probably close to 10%.
Wow,
so if
that's a very high percentage.
Yeah, if a normal account was approving at like 80%, seeing like in the low 70s now.
Wow.
And if you're doing $1 million a month, that's $100,000 that's now out of your pocket and declined.
What do you do in that situation if they're working with you versus working with like a bigger issuer like Stripe?
There's two things that we're doing. One is we partnered with a company that will actually take a percentage of your declined transactions and they'll buy them. They'll literally pay you for the declined transactions, and then they'll go after the cardholder and contact them and say, hey, you tried to process through this and this was a good transaction. We want to try to rerun that transaction. So that's number one. That'll help give you a bump right away. Number two, what I tell people is if you have somebody on your team that can call them, because what happens is a lot of times you'll get a text message on your phone. Hey, Amber, did you mean to do this transaction? But by that time, it's already declined the transaction. And then maybe you go off and you didn't see the text, you're not in your phone. That sale's gone, right? So getting somebody internally then call you and say, hey, Amber, did you get a text message from your issuing bank that said that this seems suspicious? Oh, yeah. No, my God. Yeah, I just did. Okay. Can you just reply yes? And now we're going to rerun that transaction. What that actually does is it teaches the algorithm, oh, this is a good merchant. This isn't a fraudulent merchant. And it actually ups your reputational score with the algorithms, and now you'll start to see the higher approval ratios. So those are the two main things that I recommend to keep those approval ratios high.
No, it's great advice. Thank you.
Yeah.
And I know that you have become somewhat of a refuge for Stripe holders, especially in the internet marketing world. Besides this like technology that they're moving more towards, why do you think that is?
That's a fantastic question. So Stripe does things a little bit backwards. Like most merchant processing companies, you fill out an application, you send in a whole bunch of documents, an underwriter looks at the file, checks it out, checks you against what's called the OFAC list, which is your like terrorist watch list, runs your credit and does all these things, and then says, okay, this is what you're approved for. Stripe, you go online, you answer 5 questions, you immediately have a merchant account. They don't test, they don't check background, they don't check your finances, they don't do anything. And then once you actually start to process payments, then they start to look into the files. Basically, the way they're able to do that is they are called a payment facilitator or a PayFac. So Stripe's the master merchant of record. Everybody else under Stripe is a sub account. So it's not directly your own merchant account, it's their account. So the way they set up their systems in place is approve everybody. Anybody under 25,000, it's actually now maybe closer to 50,000. Anybody under $25,000 a month, they don't even look at you. You could sell human beings on the internet. You could sell crack cocaine online, amberscrack.com, and you'd process payments with Stripe. As soon as you hit a certain threshold with Stripe, it goes to a risk screen. That risk screen looks, and they're like, okay, I guess everything looks fine. We'll let them keep processing. Once you get to $100,000 a month, it goes to an even higher risk screen. And then they really dig in and they start like looking at everything, refunds, chargebacks, terms and conditions, privacy policies. If they see something that they don't like, you're gone. There's no notice. There's no phone number to call. They don't tell you they held your funds until you realize a week later. So for people who are kind of just starting out, great. You can get on a Stripe, you can have a merchant account 5 minutes. But for somebody who's really growing a business, who's doing 100K a month, it's a very dangerous place to be. Their sponsoring bank is Wells Fargo, and now they have PNC Bank. Wells Fargo has a very strict criteria. So they also have to adhere to their sponsor bank and what they want. So about 5 months ago, they said they no longer want content creators. They made a post and they said, we don't want content creators anymore. Now they are putting the business coaching world into that content creators. So that's why you're seeing a lot of business coaches that were on Stripe that are doing 100K plus starting to get closed down. And they've been coming to us and other processors. And so it's been good for us, but that's why it's not a stable place to process, especially if you're in the K plus a month.
Under what conditions do you kick somebody off of working with IPS or hold more in reserves on your side?
That's a fantastic question. I'm going to give you a real basic understanding of the way banks assess risk. You, me, anybody listening to this, we have the right to do a chargeback and dispute something up to 6 months on our credit card bill. So if you go back 5 months and you go, oh, I don't recognize that, you have the right to do a chargeback. So when, let's say you're applying for $100,000 a month, the bank looks at 100,000 times 6 months and their potential risk is $600,000. So then they go, okay, how much money, what do their bank deposits look like? What does their prior processing history look like? What are their terms and conditions? What promises or warranties or guarantees are they making on their product or service, right? And when we look at kicking people off the platform, we look at a couple different things. One is chargeback ratios. Okay, obviously that's an important thing to monitor because it shows customer dissatisfaction, right? The other thing, which isn't as important, but we will look at refunds, right? If someone's calling and saying, I want my money back, then they're not satisfied. So maybe there's something that they're doing. The next thing we'll look at is their terms and conditions and what are they promising, right? The thing that happens in why nutraceuticals in general have a higher chargeback is it's an implied result. If you bought a shirt online and you got a shirt delivered, you know exactly what you're getting, right? There's no implication of something. If you buy a supplement that you're going to put in your mouth, there's an implication or an implied result that you'll lose weight, you'll feel better, you'll sleep better, you'll have more energy. What happens if you don't? Well, you're going to want your money back. So that's where issues come. So when we will look at holding someone's money, first of all, we're always going to reach out to our clients and say, hey, we've noticed your chargebacks spiked, your refunds spiked. The other thing we do look at also, and all payment processors look at, which everybody should know about, is rip-off reports, Better Business Bureau, any place where people can complain about your product. And if there's an escalation in consumer complaints, that's another flag that dings the risk screen and they say, hey, Amber's selling something that people aren't liking. First thing we always try and do is go pick up the phone and say, hey, Amber, is everything going on? Yeah, you know what? We had a supply problem. You know, it was coming in, we oversold and we couldn't deliver and people were getting upset, but now that's handled. Great. We've had situations where we tell somebody, hey, please don't say that if you take this supplement, you'll lose 30 pounds in 30 days guaranteed. Right? And they'll go, okay, yeah. And they'll take it off the website. And then they'll go and they'll put it on a different landing page. And then we'll still see the same problem. So really, for me, it comes down to like, if you're willing to work with us and you're willing to be open with us and listen to our advice and our suggestions, we'll keep you on forever. I had one client that was on the excessive chargeback program for 13 months in a row, and we still kept their merchant account up and going. But he was willing to work with us. And then we've had some where we're like, dude, how many times I got to tell you this? So really it comes down to trust, number one. Number two, are they willing to make changes, and do they really want a long-term business, or are they just kind of trying to just jam as many sales as they can and see what happens? So that was the long-winded version.
No, it's good to know like how you kind of decide that, right? Because you're also, my understanding is you're putting your own money at risk, like in terms of if they're processing, right? Because what happens if they go belly up?
Oh yeah, we've had it. Actually, 2024 was our biggest losses. We took the most losses in 2024 than any other year. We're usually really good in that area, but what happens is if chargebacks start to come in and that person's bank account goes to zero, we have to pay the chargebacks. So it's really important for us to trust the people we work with, which is why we really only deal with referral relationships and people we know and trust to bring clients to us, but also being able to really start to see the writing on the wall or the storm before it hits. This one came at us really hard and quick. And, it's not something that I share most of the time. We all share our successes, but 2024 was a rough year for us. It was like 200 merchant accounts that went belly up. Wow. And it was all the same group. It was the same group of people that were selling supplements and gadgets, and they jammed a whole bunch of stolen cards and fraudulent cards through. They were processing for about 12 months, 13 months with no issues. They ran into some problems financially or something happened, and they just jammed a whole bunch of credit cards through each. They bounced it around to all the different accounts, closed their bank accounts overnight, and they just all came piling in.
Wow, so dude.
That's the underbelly.
But see, that's the stuff that we need to know. I think that's one of the things when people, they'll look at somebody like you, right? Because listen, it's a great business model. Like you get people to take credit cards, you get a piece of, small piece, but like, from all these transactions, but it's like,
totally.
Why is that important? Is because you also need this to back out for you, because you're the one talking to the banks and handling a lot of risk. So it's like, that's the reason, why you're in that kind of intermediary spot. And it is risk. Like there is risk to it if something 100%. Like that happens, which is why you need stuff in reserves. Right. And I think that's the thing. Like, they don't quite understand that because
it's a conversation that I have to have quite often. And I have to tell people, like, you have to understand the risk that we're taking. Like, what do you mean? Isn't it great? Like, if I keep processing more and more and more and more, that should be good. You should be happy. And it's like, yes, as long as it's actually manageable. And that's where you get like where we have to build a comfort with this person. Like, we've been processing for years over there. And I'm like, yeah. And they're the ones that have made all the money. And we have made not dollar number one. And you're asking us to treat you as if we've been processing for you for years. And I try and do the best that I can to not create reserves, because I know people, cash flow is important. If I'm taking 5 or 10% out of every batch, that's crunching your cash flow. But it's also like, I have to have the comfort and the bank has to have the comfort level to do it. And it's like a forced savings account. If you look at it that way, like every business should have set asides and reserves and that savings. And this is kind of another savings account. But yeah, it's always a conversation.
Those are the kinds of stories I think it's important for people to hear, though. Everyone does just kind of share their wins, but it's like that's not as helpful sometimes as you learning the lesson and people being like, oh, wow, they're like people just like us trying to run a business just like us.
Yeah.
And that's like, it's a big deal. Do you think any of that has to do with the current state of the economy, or do you believe that was just like almost like a syndication of people, some bad actors that kind of got in there? Like, what's your perspective?
I think that what I hear in the industry as a whole, especially in the affiliate marketing world, or even in the online marketing world, the cost per acquisition and the cost to acquire that customer and the marketing dollars are getting harder and harder. Like it's getting more and more expensive to acquire that same customer today as a year, 2 years ago, right? So the marketing costs are going up. So now it's kind of like these guys that are in the affiliate world, they're like, okay, I can't even make a profit anymore. So now I've got to get creative. And some people get creative not the right way. So I don't know that they set out to burn me intentionally, but I think they got to a point where, I don't know, just they were in a bad position. They owed probably a lot of money and they didn't exactly know what to do. And somebody said, I've got a great idea. And just boom. It's what it seems like to me in that specific situation. I don't know that they set out to, that they were like syndicate criminals. I think they got in a really bad situation and somebody said, I've got a great idea. Just jam the cards, close the banks, and run off with the money, and you'll be good. Holding me with the bag. So,
Do you guys do any work with the police on stuff like that? Or do you just kind of let it go?
And there's a financial crimes division. Here's what happens. You have these people that are actually running the offers, right? They go out and they get what's called a straw signer. So they say, oh, I'm going to set up a bank corporation and a bank account. And this person here is going to sign the application and sign a personal guarantee. And if anything goes bad or that company goes belly up, trying to go after Jane Smith, who works at Walmart and is making $1,000 a month to be a signer on the car. Right. I go to the police question Jane Smith, and she's like, I don't know. This guy called me and told me to sign an application and I'd get $1,000 a month. I'm not going to get anything out of Jane Smith. It's right. It's unfortunate, but yeah, I mean, you can go to the police and they have a cyber crimes division, but it's really good luck. This came through a referral relationship. They obviously weren't taking the liability like I was. This is a referral relationship I've had for 10 years. They didn't know what was happening either. Like, I know that for a fact, but we all just took a hit, and I think you just kind of, it's a lesson learned, right, in business.
Yeah. It's the ones that have been incredibly expensive for me that I remember the most.
You really remember them well after that.
Yeah, you're like, oh, we're not going to do that again. It's
exactly.
That's really interesting. And what are some things that you think that people should kind of be aware of going into, we're basically Q2 of 2025. Like, what are some things or trends that you're seeing or things to be aware of? It's an interesting time to be here, particularly in the US and in other parts of the world when we're seeing Trump start to do tariffs and implement that. And the administration has really big, plans of growing the economy when the economy's been, some people say it's strong, some people say it's weak because consumer spending is still there, but inflation's high, mortgage rates are high. What are you seeing or predicting or kind of things to be aware of in the current economic state and condition, and is it going to have an effect on your clients?
So, it's funny because in a recession, our business does better because more people use credit cards.
Right. That's true.
It's just one of those. It's one of those things where when the economy does bad, we do good. Obviously that sucks. I don't hope the economy does bad. I mean, we do good either way. But it's one of those things where we're a bit of a recession-proof company. But what I will say is that in these tougher times in economies, online fraudsters are getting smarter and smarter and smarter. I'm noticing and seeing more frequent bot attacks. If you don't know what a bot attack is, it's a bot that goes out and tries to find a way to log into your gateway and test a whole bunch of credit cards. So they'll literally go in and they'll figure out how, different logins and passwords. They'll find somebody who left their computer on and didn't log out of their gateway or something, right? And they'll get in and they'll jam 20,000 credit cards in a minute through your gateway and test to see if any of the credit cards are good. So then what happens is it completely shuts down your gateway. you get charged for 20,000 authorizations. And if you don't turn that fire hose off quick, it can completely just implode your merchant account, because now it's like they see all these authorization attempts. So tightening up security measures on that, on bot attacks. There's a thing called an accelerator, which it spots immediately when they have a massive acceleration like that, and it stops it right there on the spot. And it's a setting within the gateway that you have to turn on and ensure is there. Some people are like, well, what if I have a massive webinar and I'm going to sell 10,000 courses in one day? I don't want an accelerator turned on there. Then it thinks it's a bot attack when it's actually real transaction. But there are ways around that we show our clients how to make sure to protect themselves against those bot attacks. The other thing I will say is really paying attention to processing fees, right? If you're out there and you're looking at like, okay, times are getting tougher, how do I just lower my bottom line? How do I increase? We have ways of looking at and analyzing your current processing fees and just seeing what we can do to lower it. And Amber, you've sent people to me and I've taken a look at their fees and I've said, your fees look great. You're doing great. You've really stayed on top of it. And I've said, you don't have to go with me, but go back to your current processor and ask them these questions about these line items. And some of them did go with me and some of them didn't, but I just do it because I love you and I love the group. Like I'm more than happy to just look at any ways that I can help them to just reduce their monthly expenses and costs, which just puts more money in their pocket.
I've been super helpful with that and educating our community on that kind of stuff. So thank you, Dylan. Yeah, I appreciate it. This has been great. I've learned a lot in the past 30 minutes from you. That's what I knew other people would appreciate too. Tell me a little bit if there's any questions I didn't ask you that you wish that somebody would ask you when they're doing these sort of interviews with you.
I don't know that there was any specific questions. I think sometimes payment processing has like a bad name or a bad taste in people's mouths. I think there have been a lot of payment processors that'll kind of like bait and switch people and promise them all these low rates and these low fees and then lock them into a contract. And then if they want to cancel the contract, then it's, all these termination fees. And then they give you a great rate to start and then they bump them later. And, I know that there's that level of distrust and we try to really show that we're different in that way and that we have a level of integrity and ethics and morals when it comes to, we don't lock people into contracts. If they're not happy with us, they can leave when they want to leave. We don't raise people's rates. We don't give teaser rates. We don't do any of that kind of stuff that a lot of them do because we want clients for forever, 10, 15, 20 years, and that's the way you build what we've built for 24 years.
Yeah, dude. I mean, even longer. Your mom's been doing it for 39 years, right? So you have to have longevity in the space and integrity to do that. And we love having you as our processor at Four Rooms. And, also just having you guys sponsor. I mean, when I've transitioned from Mimosa to Four Rooms, you're the first sponsor to re-sign with me on that. I'm very grateful. I won't forget that because, it was a big leap of faith. I paid every penny of the money that we had in that business to acquire it and got saddled with some other stuff I had to clean up and certainly needed that support. And, very grateful for you always believing in me and believing in what we're doing. And you've seen the growth because you process with us. So, we're growing and doing well. It's we wouldn't be able to grow at that level if we didn't have you guys helping us get through that.
Thank you. Yeah. Well, I mean, you're always you're a visionary and I saw the vision that you shared with me and I was like, absolutely, I want to get behind it. And you have 150 or 180 other people that are following you and and you're right in the sense of like you are the leader and the visionary, but it's now like our community, our group and everything. But it's just seeing where you started with Mimosa and where it is now, it's amazing. And everything business wise, personal wise, everything you've really spent a lot of time in the 4 rooms and not just one room, which makes it
Thanks, man.
very special and very unique. And you know that. I say it all the time.
Thank you, dude. I appreciate you, dude.
Yeah.
Thank you for being behind me. You know, it is a growing community, I think, just because we're taking a stand for like what truly matters. It's not just the money, although the money is important because it's a business mastermind and we all grow, you know, together. But more than that, it's about growing together as people, as peers, holding each other accountable to get healthy.
Totally.
You know, and to make a bigger impact and to have real relationships, not just something super transactional. I think that's one of the reasons why, you know, we're growing, because we have people like you in there and other people like, you know, that are kind and are doing good business too. Yeah, it's an honor to have you. So thank you, my friend, and love having you as my processor and my friend, and just super grateful for you. And thank you for such an informative lesson today. It's great.
All right,
my friend. Well, I'll see you at an event pretty soon. Thank you.
As we wrap up today's episode, we have something special just for you. If you've been inspired by what we've explored today and you're ready to take your learning to the next level, then our 4 Rooms Mastermind live event is the perfect next step. And because you're a part of our podcast family, we're offering an exclusive 10% discount on your registration when you apply and are accepted. This is your chance. It's your chance to build relationships with other ambitious entrepreneurs like yourself, to dive deeper into the 4 rooms of entrepreneurship, and to connect with experts who can truly help accelerate your growth. Simply follow the event link in the description of this episode and use the promo code 4rooms10. That's FOURROOMS10 on your application to claim this opportunity. This offer is subject to application approval and it's limited, so don't wait too long to make your decision. Join us and transform your journey with the insights and networking that only our live events can offer. Thank you for tuning in today. We look forward to seeing you at the event, and of course, right back here next time on the 4 Rooms podcast. Until then, keep balancing and keep growing.